I'll take you back to a great example. Okay, a great example. I remember when Meta went public. Back then it was Facebook. Okay, I remember when they went public, and there was a lot of debate about like, how are they going to make money from that? Like, I don't understand. Sure, they got all these people interested in it and using it, but how are they going to make money? Like, that was a real question. I kid you not. That was the main question when Facebook went public. How are they going to make money from it? Like, people were so confused about like how they could make money, and nowadays we're just like, are you kidding me? Like, that was a serious question. I kind of look at this. I'm like, you think if they have all these folks interested, they're not going to be able to make money from this? Are we serious about this? Like, what are we talking about here? Okay, of course they're going to be able to make a lot of money from this, right? Do you know what the one company in the world that's making profits from AI right now? One company, NVIDIA. Okay, NVIDIA. No one else is making profits from AI right now. Snowflake's not. Microsoft's not making profits from AI right now. They might be making some revenue, but they are not making profits. Amazon's not making profits from AI. AMD's not making profits from AI. Snowflake's not making profits from AI. No one's making profits from AI right now other than NVIDIA. Okay, that's it. They're the infrastructure going in, right? AMD will obviously kick in likely in 24 as another huge infrastructure play in regards to the chip side of things, right, on the hardware side. And then we'll start to see the software kick in a major way in 2024 for a lot of these companies. But let's be clear about this. You know, don't just act like, oh, Palantir, they're the only ones not making money. No one's making profits from AI outside of NVIDIA right now. Let's be very crystal clear about that. Small and mid-cap stocks, okay? Small and mid-cap stocks have been cheap since the second half of 2021. I was doing videos even back in the second half of 2021 talking about small caps and mid-caps are cheap. These freaking stocks have been cheap for years now, okay? At some point, yes, they're going to be priced accordingly. But the problem is that getting the timing right of when the smalls and mids make their move, that's been the really difficult part of like, is it this year? Is it next year? Like, when is this? Eventually, it's going to happen, and they're going to be priced more appropriately. But these stocks, let's not kid ourselves, have been cheap for 2 years. 2 years now, okay? I remember doing videos in early 2022 talking about how cheap small caps were. You know, they've been cheap. They've been cheap for a while. And at some point, it will be reflected. Their true, let's call it, valuations. But dang, man, like we've been waiting for a while. I didn't tell you that. We've been waiting for a while. If you want to know an industry to watch specifically for this next 2 quarters, to really understand if the consumer's really tapping out or not, watch this specific sector. Industry is restaurants. Watch the restaurant sector. That sector has been hot for, certainly the last probably about 1.5 to 2 years. Very, very hot sector. If we see real weakness and pullback there, that's definitely a sign of consumer tapping. We've seen it from a lot of retailers, right? But we haven't really seen it from that restaurant side. If we see it from there, really like, okay, the consumer's tapped at this point in time if they start cutting back on even restaurant visits. So just something to keep in mind over this next 2 quarters here. Corsair Gaming, CRSR. Corsair Gaming, about $46,000 in this one. It's about a 2.67% position for me. Corsair, if anything, I've been a little bit of a net seller of this stock over the past few months. With that being said, I'm not planning on selling any more Corsair in the short term. And here's the deal with Corsair, okay? It's trading about 25 times this year's numbers, which is a little rich for a company like them that's more of a hardware electronic company, right? But based upon next year's numbers, we're talking about this is probably trading at, depends upon where you got your EPS numbers, I'm thinking between about a 15 and 18, which is pretty fair for a company in the hardware space like a Corsair Gaming. So overall, I look at Corsair Gaming and I see a company that I don't really want to sell any more shares of, but at the same time, the stock's not really trading at a range that I necessarily want to buy more right now, right? So for me, it's actually kind of just a hold right now. Now, with that being said, if the stock went down a bunch, I'd be buying more shares. If the stock went up a ton, like let's say it's also trading at $25, $27, I might be a net seller of Corsair overall in regards to this one. It just hasn't had as much of a growth profile as we might have hoped, right? Next stock up here is RVLV, which is an e-commerce company, really in the clothing space. And basically, the stock is at nothing for us right now. We can just call it basically break even, right? In regards to RVLV, it makes up about 2% of the portfolio overall. I have about 3,000 shares here. I like RVLV. Will I be buying the stock? Yes, likely I will be. It trades about 27 times this year's numbers. Next year should be a much better year for the company overall, and especially when it comes to profitability. I don't know if it's going to be the most exciting revenue year for the company next year, but definitely expecting nice profitable growth in terms of the bottom line next year with some adjustments they're going to make, because obviously the revenues have come in lighter than they expected. And there's kind of like a divergence between when you have revenues that aren't quite expecting, what you're expecting as far as management goes. Usually it's going to hit your profitability much more. Then you're going to play more conservative. Maybe you do some job cuts, some hour cuts, things like that. Next thing you know, you find some cost synergies, and your profit growth can be in a nice place, even if your revenue growth isn't at that particular time. Big short interest on this one, which I just think is interesting overall in regards to RVLV. So I love the management team here, love the business model. I will likely be buying this stock, especially if it goes any lower, okay? That's RVLV. Sometimes people are applauded because, they were in tech stocks, and I've heard this even about, the one I look up to the most, Warren Buffett, right? They avoided the tech bubble. Wow. There's two other sides of that, okay? Ultimately, they did far worse by avoiding tech stocks. Let me just tell you that much, okay? So, you didn't get involved, and so you didn't go through the pain of 2000, 2001, 2002, right? Okay, you also missed the insane run-up of the late 90s, basically from like 94 all the way through, to 2000. You also missed the coming out of, 2003 and beyond of, countless tech stocks going up hundreds of percent or thousands of percent or some tens of thousands of percent during that time, right? So, just because, you didn't play the game, right? I mean, you could just not be in the stock market also. And guess what? You'll never have to go through any crash. And people will say, oh, you're so smart. You never had to make it through any crashes. Well, you also didn't prosper in all the upside that was there over the years as well, right? So that's part of the playing the game that I just don't think a lot of people understand on a high enough level is, the gains you can make on game-changing stocks is so monumental. The most you can lose on a stock is 100%, right? Goes to bankrupt, you lose 100%. And that's if you stayed the whole ride through, all the way to bankruptcy, right? The most you can make on a stock's unlimited. You can make thousands of percent, hundreds of percent, tens of thousands of percent, hundreds of thousands of percent. Like, there's no cap on that. And that's the beauty with building a great diversified portfolio is you just find a few of those opportunities and they're game changers for your portfolio and for your returns overall. So overall, I mean, my thought process around this kind of predicting recession is if you're truly, really concerned about recession, right? You can just hold a little more cash, right? If you're a more sophisticated investor, you can put on a few hedges in the market, right? Doesn't mean you have to sell your whole portfolio and go all cash or something like that, right? That's not a fun position to be in because you're probably going to be wrong. Just to be quite honest, most of the supposed most intelligent people in the financial markets, the people that went to all the most prestigious universities in the world, that their parents or themselves, probably their parents, paid fortunes for them to go to and get master's degrees in business and finance and all this stuff, okay? All those folks were predicting super hard landing this year. We were going to, market was going to be down massive. It's going to be nasty. And it just hasn't played out, right? So these are some things to kind of keep in mind, right? Bottom line is you're nervous about the future year. Cash up a little bit. Have a little cash around. That way, in case things get bad, you can go out there and you can plow some money in the market if things really get ugly and all of a sudden assets are much cheaper. Hedge up a little bit if you want to be hedged. A little hedging goes a long way on a given year if it's properly done. So, there's always options out there. It's not just fear.